are two funding options from the Small Business Administration, and the President signed what was considered the Corona Aid, Relief, and Economic Security Act on March 27, 2020. This is commonly known as the CARES Act. And as part of the CARES Act, there were two loans that became available to the businesses, to small businesses, and these are called the Economic Injury Disaster Loan, or commonly known as EIDL, as well as the Paycheck Protection Program, or the PPP Loan. So we're going to start off with the Economic Injury Disaster Loan. Again, this is commonly known as the EIDL loan. It's got an interest rate of 3.75%. The payments are going to be deferred for up to 12 months, and the loan matures at 30 years. As part of the EIDL loan, there was an advance for up to $10,000. It was $1,000 for each employee that each small business had, and this would be considered a grant and would not be liable for repayment. So what can the EIDL be used for? It can be used for fixed debts, which can include rent. It can be used for payroll costs, accounts payable, any bills that could have been paid but weren't due to the coronavirus disaster, any IRS payment obligations, and then what expenses are not included in the EIDL. No dividends or bonuses, no disbursements to owners, no stockholder loan repayments, no relocation or expansion of facilities, no refinancing long-term debts, no paying off debts to federal agencies, including the Small Business Administration, but the IRS is exempt, okay? So pretty much the EIDL loan, you cannot use those things for owner draws, things like that, especially as a small business. You know, you want to make sure that you're getting paid, but you need to make sure that you are on payroll. If you're on payroll, those payroll costs are included in the expenses you are allowed to use for the EIDL. So here is the kicker though. No expenses used in the EIDL loan can also be used for the PPP. So you have to split those out. You can't use both or the same expenses for both. So if you're running payroll costs for 8 weeks with the with the PPP loan, you can't use those same payroll costs to be as part of the EIDL loan expenses that you're trying to use them for. And last, you cannot use them to lobby. That is a pretty big one as well. All right, we're going to flip to the Paycheck Protection Program. This is commonly known as the PPP loan. This loan has an interest rate of 1%. The payments are going to be deferred for the payments are deferred until the SBA pays the bank or the lender. So the EIDL loan comes directly from the Small Business Administration. The PPP loan, those are coming directly from financial institutions. So you would have applied directly to a bank. So when the payments come due, the SBA is actually going to pay the bank. And at that point, the payments would become due at that particular point. Now, some of you may choose not to apply for forgiveness, so let's make a side note here. In order for the Paycheck Protection Program, in order for those monies to be forgiven, you have to apply for that directly with the bank, and the bank will send that application to the SBA, and then they'll receive their funds. For those of you that do not apply for forgiveness, 10 months after the first date of disbursement is when your first payment will become due. So basically you want to make sure that you apply for forgiveness, because if you don't, the loan will become an actual loan to you. The loan will mature at 2 years if it was signed by June 5th of this year. There were some additional amendments to this, and after June 5th, the loan can mature at 5 years at that point. The good news is, for those of you that signed your loan prior to June 5th, this was originally covered for an 8-week period, This has now been extended to 24 weeks. And you can choose whether you want to do the 8-week period or the 24-week period.